Here we go with our trader rundown. Todd Bubba Horwitz of BubbaTrading.com joins me now for his take on the market action as we get closer to that jobs number on Friday. Hello.
Good morning. It's great to be here. And again, I think you'll expect to see more stagnation in the overall markets. I mean, we're now on 34 days in a row with not much movement. We've all been pointing.
It's eerily quiet.
Well, they're waiting. It's summer. Remember, it is the weekend before Labor, or the week before Labor Day. So everybody's on vacation. Now we're waiting, everybody's waiting to see if there's actually going to be an increase in rates. I think that the banks, the currency, the bonds are all indicating that all systems are go to go higher. Now the question will be, what's the number going to be tomorrow? And what will Janet Yellen do with that number? And where will they go from there? I don't think they're going to be ready to raise in September. I think they'll raise after the election, and the best thing for the whole economy would be to start raising as soon as possible.
Let's break this down a little bit more here. Now, you talk about the banks, and people have been putting money into the banks thinking that interest rates will rise. Maybe that's an indication that we get a decent jobs number as well. I just want to talk about Goldman Sachs. We had yesterday 4 calls trading for every 1 put at one point. Bank of America, 2.5 calls trading for every 1 put. That tends to be a bullish sign.
Oh yeah. The banks,
and it's coming from the big money. These are big time players coming to the market.
Because the banks want to see rates go higher. Let's just do a quick explanation why the banks want rates higher. Banks lend money based on how much they can make. They call it a spread between what they borrow the money at and what they can lend it out at. It needs to get away from where the Fed rate is, where the 10-year bonds are, so they can make a bigger spread, so they can become more profitable. If we raise interest rates, that will allow the spread to widen itself, which will allow the banks to free up money and then provide liquidity so people start borrowing. So that's good for the banks. Higher interest rates are good for the banks, and that's what they want to see, and that's what I think they're going to see.
Do you follow the money, though, and buy the banks, the bank stocks?
I think you continue to look to buy banks. I mean, if you bought them down when they were depressed as a trade, you may look to take some profit here. But overall, if interest rates are going to rise, the banks will come back to being the strongest part of the market, and the other things might start to fall. But it is very good news for the banks if they do raise rates.
Are there banks that top your list?
I like a lot of the regional banks. I think those are the ones that are struggling the most. You know, we've talked about SunTrust before here. I think Fifth Third is probably a good bank to look at. U.S. Bank. Those are all good banks here because they're regional and they're more dependent on getting this money out on the street, which they haven't been able to do for a while.
Thanks for coming on the show.
My pleasure.